The stock market is closed for the holiday, but the real signal is not closed at all. Under the surface, liquidity already moved after a weaker jobs report changed how Wall Street is pricing the Fed. The mistake would be to think a quiet market means nothing is happening. The calm metrics view is simple. When price is asleep, liquidity can still be voting. The key shift is that soft labor data reduced the pressure for the Fed to stay aggressive right now. That helped parts of the market breathe, weakened the dollar, supported gold, and gave Bitcoin a cleaner macro backdrop for a short-term bounce. But this is not the same thing as a healthy, broad risk-on signal. It is a repricing of the Fed path during a thin holiday window, and thin windows can make signals look cleaner than they really are. The split underneath the headline is the real story. The Dow pushed to a record, but the Nasdaq was dragged lower by another wave of pressure in semiconductors and AI-related names. That matters because for most of this cycle, Wall Street's confidence has been concentrated in the AI trade. When liquidity expectations improve, but the leadership still cracks, the market is not saying everything is fine. It is saying investors are rotating, hedging, and becoming more selective. Bitcoin tells a similar story. It can benefit when the dollar weakens and rate pressure cools, but the ETF flow story is still not as strong as the old bull market narrative suggested. A bounce above a key psychological area does not erase the fact that institutional demand has been tested hard in recent weeks. For crypto, the question is not just whether price can bounce. The question is whether real capital is willing to stay. So the takeaway before the next real trading session is not panic, and it is not celebration. The market is giving a mixed message. Easier Fed expectations on one side, fragile leadership, and cautious institutional behavior on the other. That is exactly why holiday calm can be dangerous to misread. Price is the surface, but liquidity is the message. And right now, the message is moving before most investors are even paying attention.